Silver just hit a new all-time record high. It's above $51. We finally took out the peak from 1980. I think we're going to be at 100 pretty quickly. We could even be at 100 next year. And I think gold, which is now above 4,000, has a shot at 5,000 by the end of the year. But it may not get that high this year, maybe 4,500. But I think 5,000 is definitely in the cards for 2026. In fact, we could be at 6,000 or higher next year in gold. Gold is the one monetary asset that all these central banks can rely on. It is the system that dominated pre-Bretton Woods, and even in the initial years of Bretton Woods, up until 1971, even though the world was using the dollar was redeemable in gold. So the world was still backing its currency with gold.
The U.S. is surviving on borrowed funds and borrowed time. That's how Peter Schiff characterizes the state of the economy now. He claims that despite continuing to pose as the world's largest debtor, America has become the world's biggest debtor. Schiff contends that Washington has found itself in an endless cycle that it cannot break after years of careless spending, trillion-dollar deficits, and incessant stimulation. A delusion of prosperity based solely on debt is created when the government borrows money to finance spending, and the Federal Reserve produces money to maintain the borrowing. Schiff says this phony boom is already beginning to show signs of weakness. The typical American's financial situation is getting worse, inflation is still unabated, and interest rates on the national debt are skyrocketing. He thinks the US economy is inflating rather than growing. Schiff cautions that the debt spiral is now too big to reverse without dire repercussions, despite politicians' claims that they can control it. Be sure to like, subscribe, and hit the notification bell for more insights into gold, silver, and precious metals investing.
Gold's at an all-time high, silver's at an all-time high. What is driving the bull run in precious metals?
Well, I think what you're seeing is the acceleration of de-dollarization that began really a couple of years ago. I think what started it in earnest was the Biden sanctions against Russia, which really was a wake-up call for the rest of the world that they need to get rid of dollars. They need to have a more secure reserve that can't be just confiscated at the whim of the United States. And then I think it accelerated with the election of Donald Trump and the complete reckless and irresponsible spending by the Trump administration, despite the fact that Trump campaigned to try to do something about the reckless Biden spending. He made it worse. The big, beautiful bill just expanded on the excess spending and made it clear that we're never going to get our house in order. Then on top of that, Trump imposed the tariffs and vilified a lot of our trading partners for basically participating in the dollar's reserve currency status. And he's beating up the Fed about how stupid and what a moron Powell is, and we've got to slash interest rates, and he's trying to fire the FOMC members that he disagrees with so he can put his own cronies up there. So really throwing into question the independence of the Fed. And so we've basically told all the foreign central banks, get out of dollars, get out of treasuries. You're going to get wiped out to dollar debasement and inflation. And where are they going to go? There's only one alternative, one viable alternative to the dollar, and that's gold. They're not going to, move into euros or pounds or Japanese yen or RMB. Gold is the one monetary asset that all these central banks can rely on. It is the system that dominated pre-Bretton Woods, and even in the initial years of Bretton Woods, up until 1971, even though the world was using the dollar was redeemable in gold. So the world was still backing its currency with gold, even though they did it through the US dollar. But now I think, just like we went off the gold standard in 1971, the world is going off the dollar standard, and it is going back on a gold standard. And now what's also significant is Wall Street has finally woken up to this reality. And now you're seeing major Wall Street banks that have never recommended gold now saying that their clients need to have exposure to gold, whether it's 10%, 20%. It's now something that, mainstream investors are finally going to start to participate in. And, prices, I think, are just going to head ballistic from here. Silver just hit a new all-time record high. It's above $51. We finally took out the peak from 1980. I think we're going to be at 100 pretty quickly. We could even be at 100 next year. And I think gold, which is now above 4,000, has a shot at 5,000 by the end of the year, but it may not get that high this year, maybe 4,500. But I think 5,000 is definitely in the cards for 2026. In fact, we could be at 6,000 or higher next year in gold. Yeah, well, first of all, we've made it clear that China is our enemy, right? And so China recognizes that, despite the fact that they're our biggest supplier of goods and one of our biggest lenders, right? So talk about biting the hand that feeds you. We have owed a lot to China, and we've basically framed them as our enemy. And so why would our enemy want to hold its reserves in US dollars and US treasuries where they're extremely vulnerable? So I think China is completely divesting. It's on that path of replacing its dollar reserves with gold reserves so it can truly have an independent monetary system. I think eventually they're going to depeg the Hong Kong dollar from the US dollar and maybe peg it to an RMB that I think ultimately will be backed by gold. I think the Chinese are headed for a Chinese currency that is backed by and maybe even convertible into gold, just the way the US dollar was at, once upon a time. I think that is the direction that they're going. And, China is the world's biggest gold producer. So they have a lot of gold in China that they're producing. They just don't export any of it because the Chinese government buys it as fast as they could dig it out of the ground. Well, the reason that Bitcoin is up that much is because there was a big drop in Bitcoin and then it had a huge rally, right? But if you look at the peak from Bitcoin, which was in 2021, when they had right after the ETFs came out and all that, or there was, Bitcoin got up to 69,000 in November 2021. And at that time, gold was around 1,900. Today, Bitcoin's around 123,000 and gold is over 4,000. Bitcoin is about 15% lower today than it was at that peak priced in gold. And so to me, that was peak Bitcoin. Even though technically in August of this year, Bitcoin got a little bit higher than that in terms of gold, but not much, but has since collapsed. I mean, Bitcoin then declined by a full 20% priced in gold.
All right. So
maybe it's down about 18% right now from its peak from August. I mean, I think there's a lot of downside risk in Bitcoin. I mean, I think Bitcoin is much more highly correlated with the NASDAQ. And yeah, tech stocks, the NASDAQ made a new record high yesterday as well. So risk assets have been in favor and there's been a big appetite for risk. But we can easily have a correction or a bear market in risk assets. And that would include Bitcoin. And I think if investors get more risk adverse, they're more likely to want to buy more gold, not less. So if we have an overall decline in the stock market, the gold bull market can continue.
Peter Schiff has been arguing for decades that gold should be included in every portfolio, and now major investment firms are finally agreeing. However, this goes beyond merely confirming Schiff's long-held beliefs. It marks the start of a significant change in demand worldwide. Central banks will now face competition from institutions and regular investors who are now understanding that fiat money is depreciating, even as they continue to purchase gold at record levels. Schiff warns that the Federal Reserve will soon resume quantitative easing to keep long-term rates under control as foreign demand for U.S. Treasuries diminishes, despite the fact that the US is lowering interest rates despite rising inflation. Investors may sell off a lot of bonds and send gold prices soaring if they heed Morgan Stanley's new advice. Make sure to like, subscribe, and click the bell icon to get notified whenever we upload new content. We really appreciate your support.
How do you think about gold?
Morgan.
Yeah, how do you think about gold in a portfolio?
Yeah, I mean, the reason I put that clip from 10 years ago up on my X account, and that was when gold was at 1,200, right? But that was typical of the way I was treated on like a CNBC when I recommended gold. Everybody laughed at it. They said it was a stupid investment. They said that the only reason I'm recommending gold is because I'm a gold salesman and I'm just trying to get people to buy gold. And of course, they never said that to stockbrokers, of course, which I also was. But you have all these investment advisors and stockbrokers recommending stocks, and they never question their objectivity. They don't question the objectivity of the Bitcoin community. Somebody comes on like a Michael Saylor and says, buy Bitcoin. No one says, well, come on, Michael, you're only saying that because you're leveraged and loaded up with Bitcoin. No, it was only me who recommended gold that they just accused me of just talking my book and being disingenuous and trying to scare people into this lousy investment. And the bottom line is, it was a good investment. Most people have done better in gold than in the stock market over 10 years, 25 years. And they're certainly doing a lot better in gold this year by a long shot. You know, they keep talking about the record highs in the stock market. This is one of the worst years ever for the U.S. stock market if you price it in gold. So gold investors are doing a lot better. But my point is that now, finally, people are not getting laughed at for recommending gold. Right now you have, okay, yes, you know, maybe we should have gold in a portfolio. Yes, right. They should have had it in their portfolio 25 years ago. Right. But the fact that they're now starting to include it, not only does that, you know, basically validate what I've been saying all along, but it means that the demand for gold is about to go through the roof because central banks are going to keep buying. They have a lot more gold to buy than they've already bought. But now they're going to be competing with private investors, both institutional and retail, in this market. And, you know, I have this gold company called Schiff Gold, and sales for the last 3 years have been very lackluster. I mean, it's, you know, it's not like gold has been going way up. It's doubled, more than doubled in the last 2 years. Yet business has been slow because people were afraid that gold's topped out. You know, I don't want to buy the highs. So a lot of the normal buyers have been on hold. Now everybody is starting to realize that the sky's the limit on gold, that there is no top because there's no floor to the dollar. That's really what's happening. The dollar is going to be losing a lot of value as we open up the spigots. The Fed is cutting interest rates into rising inflation. Not only is inflation well above the 2% target, but it's headed in the opposite direction. It's going up, yet the Fed is cutting rates anyway. I think by next year, they'll be back at QE because they're going to try to keep long-term interest rates from rising, which is what they're going to do. We're going to see a backup in interest rates as the world sells treasuries to buy gold. In fact, you mentioned, you know, Morgan Stanley said the 60-40 portfolio should be 60-20-20, where you cut the bond allocation in half. So if all these Morgan Stanley clients sell half their bonds, which would be a lot of U.S. treasuries to buy gold, not only does that push gold up, but that pushes treasury bonds down and pushes yields higher. And the Fed doesn't want higher yields. Trump doesn't want them. So the only way to bring them down is massive quantitative easing, which is just going to drive even more demand for gold because all that is more inflation and more reasons to get rid of your dollars.
According to Peter Schiff, the mainstream financial media made fun of him for years for suggesting gold, particularly when the price was around $1,200 per ounce. Commentators ridiculed him on big networks, saying he was a gold salesman who exclusively advocated gold. Schiff, however, drew attention to the hypocrisy. Neither stockbrokers nor Bitcoin evangelists like Michael Saylor have ever been accused of prejudice for pushing stocks or cryptocurrency. Schiff added that in spite of the criticism, gold investors have done better than the stock market in the last 10 years, particularly this year when the price of gold has risen far faster than that of stocks that were originally valued in gold. Schiff now observes that sentiments around gold are drastically changing. The same big investment firms and advisors that used to make fun of him are now subtly increasing their gold holdings. He sees that as not only confirmation, but also a harbinger of an impending surge in demand. Although central banks are still making aggressive purchases, institutional investors and the general public will soon start to compete with them. Schiff claimed that because investors believed gold had peaked, even his own business, however, as more people discover that gold has no upper limit and the dollar has no lower limit, that is beginning to change. He cautioned that despite inflation continuing to rise, the Federal Reserve is lowering interest rates, which he sees as evidence of a serious economic blunder. As international investors shift their holdings from treasuries to gold, Schiff anticipates that the Fed will soon resume quantitative easing in an effort to manage long-term interest rates. Thanks for watching. Be sure to like, subscribe, and ring the bell for the latest gold and silver updates.